It's Monday, March 10th. Let's level up. Another down day. Markets seem to be getting smacked with bad news. There are a little bit of worries about the tariffs, some news about Apple delays for their new Siri upgrades. Google had some negative court rulings after them on Friday that trickled into the market today, although that has an interesting setup we'll talk about in just a moment. VIX is getting a little bit of a rip. We are running into some resistance between 29.76 and 30.81, and we are coming up from the bottom, so I do think a little bit more possible, but probably not much more that's sustainable, at least in the short term, barring some unforeseen event, of course. With regard to the ES and the NQ, we've had some breakdowns of levels that are key below 58.09, below 56.73, and we're coming into some fib extensions here. On one time frame, we have the 2.618 at 55.31.5, and then we have a 2 times range on the larger consolidation at 54.39.25. There may be some more down, but maybe not a ton more down, at least in the short term. Q, similar situation. They have a confluence of fib extensions, the bigger 2 times range, 18,938. And then, of course, the smaller time frame, 2.618, is down at 18,838.5. Do you think maybe a little more down, but then there is likely some support. On the bounces, to repair today's underwater close, we can go to 19,660.25, which is the shorter time frame 2 times range. Generally on the upside here, 200 MA 30 minutes are going to be key. Even the 100 MA 30 minutes have been key. If we were to have an up open tomorrow, the underside of the ES channel lines up right with that check back to the 56.73, which was the low from the prior session on Friday. It also lines up with that 2 times range at 56.81.5. Now, if the Qs were able to make it to the channel high tomorrow, because they are still within the channel, that's somewhere closer to around 20,000, 20,005. If it happened early in the day, if it was by the close, it'd be 19,964. SPY is breaking below channel the last couple of sessions. We're actually below the 113 reference low at 575.35. This 716 breakout zone at 565.16 is key. We're actually below it a bit. If we have a higher low tomorrow and then we're able to get up over today's high at 569.54, I do think that there could be a rally back maybe to the 10 MA at 582.09, and then we'd see. If we do keep pulling back, 539.44 and 535.29 are big downside targets. Qs finally filled the 918 gap. We got very close to the 61.8 at 467.65, so this technically is due for a bit of a bounce. I'm curious to see if we'll get it or not. I think that a lower open obviously would behoove traders. We've seen these up opens get sold into, but if there were the bounce, that whole fib to fib thing, 481.30 would be that 50% range. And if we go from the all-time high here, which was a look above and fail on the 219 high, and let's just assume today's low holds the 310 candle, the 38.2 of that range is at 494.95, and the 200 MA is at 492.94. So that area I do think would be a potential upside target and maybe even potential resistance, at least on the first test. Apple had been trying to hold in, but that also succumbed to some weakness today. We're right on the 200 MA at the 227.27 area. If that can't hold, we'll see the 219.38 level, which is of course the reference low on 121, and then we'd see we are below the channel, so it's kind of do or die here with regard to that 200 MA. If you want to do some kind of a 1/2 put ratio playing for the breakout down in the 196s to 199s, I'm good with that as long as you can fill it for a small net credit or even for zero. If we were to keep pulling back and we cleared below the 219.38, I think we could see the new channel low, depending on how many days it takes to get there, and there first at 210.65. So don't just assume the end range that we go to the 196s to 198s. It is possible there's some support there before that. With regard to Google, we do have a little bit of a look below and fail with the 3.3 low. So if we were to have a higher low tomorrow and then cleared today's high of day at 168.47, I think we could fill in the gap to the 173.86, which was Friday's close, and maybe even make a run to the 175.37 to 177.13 reference resistance, and that would line up with the 20 MA and downtrend. So if you want to do some kind of a call spread, those 180s, 185 area I think is a good upper strike. If we do continue lower, the next support is 159.74, and then after that, there's really not all that much between 147 and 22, but that would be a significantly larger correction, and Google's already down a lot from the top. We did spend some time above the channel, so a little bit of time below the channel here doesn't really spook me just that much. Nvidia getting close to my end range targets. We are on the channel low here. I do think there is a potential for the obscene number down to the 100, maybe even something into the 90s. Anything below 110.11 is vulnerable. Don't get too complacent. If we were to have a higher low tomorrow and then clear today's high of day of 111.85, yeah, there could be a bounce to at least the 10 MA, probably 118.08. Tesla has been getting rooked. Coming down into some key support here, the 1023 gap fill at 213.65. I've told you I thought there was room down to the anchor VWAP at 199.63. No one's laughing now, are they? I had said I thought that there would be some support between the 251.44 and 271 area. We did get it, but it didn't last very long, and now we seem to be steaming a bit lower. I don't know that I'd be shorting the lows here, but I definitely would be looking to cover the shorts at that anchor VWAP and maybe even look for a short-term reversal, because everyone tends to be bearish, and all I kept on hearing today all day was pretty much that there's going to be a guaranteed recession. The only thing that's guaranteed are death and taxes. Bitcoin bouncing off the 200 MA also filled the 11.8 gap. I had told you I thought that was possible at 77,100. I remember a lot of people told me on 121 when we had the look above and fail of 108,960, it was no big deal. Don't hear much from those people lately either. Although I do think that there is some support here now between 74,415 and this 77,100. So if you're looking to buy the dip here, we do have some tweezers on the lows. Could use the 76,999 200 MA as a stop. Gold getting smacked a little. I told you this is a risk-on, risk-off asset. Do have a potential for a lower high here. Careful below the 20 MA at 268.47. I do still ultimately think we see the 279.29 two times range. It's just a matter of when, not if, in my opinion. But it is possible we do see some selling if there are margin calls and liquidations of positions. Often a lot of traders fund the losing trades by selling their winning trades. Kind of odd logic, but that's how they roll. TLT getting a little bit of a bounce. Interest rates coming down is always good for PE multiple premiums. Bulls do have resistance between 92.72 and 93.27, which is of course the 200 MA and 50% fib. We tagged out the 200 MA, pulled back and held the 20 MA. So it's caught between those two MAs. Could just be in a range between these 90s and 92s, 93s for a little while, but one of them will eventually break, and when it does, I think it's a go with. Generally speaking, up opens tend to get sold. Fridays after big down weeks usually get bought. We've seen this now a couple of times. Also, in bull markets, when we're up all week, we tend to see selling on Fridays to lock in some gains, of course to avoid some weekend risk. I am not convinced that the decline is definitely over yet, but I think we're probably closer to a tradable low for a bounce than we are to seeing significantly lower lows without news. I do think it is possible. We do see ultimately lower, but I'd like to see a move higher first. We are coming down from all-time highs, so it's very rare that you just crash from all-time highs. COVID, of course, being the exception, but without some kind of a worldwide pandemic, that seems a little unlikely this time. Like and follow for more.